And Giselle couldn't join us due to a scheduling conflict today, unfortunately. But let's pick up the conversation with Greg Gibbs. And unfortunately, you're stuck with me.
I know you told me that Giselle was going to be here. Otherwise, I'm not sure whether it would have come today.
So it's hard to know whether Giselle is actually buying up dollars now in light of the fact that she's got $47 million in earnings. But what currencies are you buying?
Well, I'm thinking of calling up Giselle for some currency advice. She seems to do a pretty good job of it. But look, at the moment, it's all about dollar strength, as you know. I mean, talking to my traders this morning, you read their notes, all they want to do is buy dollars. It's just a question of at what levels. And we have seen a correction in the market overnight. We've seen the dollar actually weaken quite significantly. The first significant fall you had in the dollar for,
I guess, a number of trading sessions. Is it because the dollar hit a psychological threshold of 100?
That's right. Even that dollar index that a lot of people look at, which has got a big component in the euro, so I'm not quite sure how relevant it really is for the markets. But that said, I mean, the euro has just collapsed over the last month, over the last week. It's generating a lot of volatility, and you are going to see, some bounces from time to time. You would hope, in any case, but at this stage, psychologically, the big level probably for the euro is going to be parity, obviously, and it's almost like
fast and furious. When's it going to happen? I've heard a year end, but it seems increasingly it's going to be brought much forward.
I think you're right. I think there's almost like a gravitational pull now. Once you've hit that sort of 1.05 level, it's that 5 number away from parity. It feels like there's a gravitational pull.
But Nick, do you think there's a word of caution in light of what's going on with this herd mentality?
Yeah, I'm sympathetic to the broad view. I mean, it does appear to be accelerating to the downside, and that sort of parity level is probably a long-term, where the long-term uptrend is if you look at a monthly chart. So from a technical perspective, that's kind of a key support level. But I guess there's a couple of points to note. I think that the first one is that the oil prices have stabilised, and I think the stabilisation in oil prices may help the euro a little bit. You have seen a stabilisation in the data, so the macro news flow has improved in Europe at the margin. And I guess the final point to note is that everyone is bullish on the dollar.
Yeah, but how high can the dollar go? The historical highs are in 1985. We still have a good distance to go from the threshold of about 100 to about 145 or so. What's your view?
Well, I think what you're seeing with the policy direction in Europe now, and I guess also the divergence in policy you're seeing in the Fed, you should anticipate that the euro does go to an extreme. Currencies are very heavily driven by those short-term rates, and they're negative. If you're an investor in Europe now, your broking account is going to say, look, if you hold cash balances on your account in the euro, we're going to charge you 20 basis points. Yeah. And no one likes to pay for just sitting in cash, right? So you could have a situation where a number of corporates, for instance, have been accumulating euros over the years. We've all heard about the US corporates, for instance, have been accumulating a lot of cash balances offshore because they don't want to repatriate and pay tax in the US. And now they may be going, well, maybe we need to get that money back into the US dollars. So you could easily see this sort of momentum and panic develop in a currency where there's negative interest rates. And also you've got a situation where the currency markets have been affected by the increased regulation and compliance measures around what they can and can't do. You just don't have the same kind of risk appetite at banks to warehouse risk. So you've potentially got a situation where you could see extreme volatility, and we could get there quite quickly. So for me, I think it's very clear you to stay out of the euro for the time being, and don't pick a level where you think it's going to stop on the downside. It's going to go to an extreme here sooner or later.
What about some of the EM currencies? Any thoughts on those?
Well, when you generate volatility in one market, it tends to spill over into other markets, and that is a concern of mine. If we do start to see this increased, volatility in the euro, will spill over into, I guess, risk aversion, as we say in the market, which could see, that spill over into weakness in emerging currencies, some of those higher growth, higher beta currencies. You can see weakness in commodity prices spill over to commodity currencies.
Do you have any key targets to give away before you go?
0.9 is where my psychological level for the euro is. I think it's going to break parity here. You know, I think commodity currencies are going to come under pressure. I'm Australian, so obviously, you know, follow the Australian dollar a bit. I think, you know, even in Australia, the local people are thinking now, like, you know, it should go to the sort of low 70s, but they're almost thinking, well, maybe it's got there a little too quickly. I actually think you can break 70 and get down to 65, those 65. Kind of levels for the Australian dollar. We'll see the dollar yen is in a gradual uptrend here. It's probably getting to the mid 120s over time. So overall, it's still a very positive dollar story.
Greg, you know, I think I need to go start looking for those US dollars that I had tucked away in my closet.
Well, yeah. Well, you're a Singaporean. The dollar Singapore is heading up as well at the moment. It's been grinding its way up steadily. So.
Yeah. The dollar and its ascent. The story continues. Greg, much appreciated. Thank you so much. Greg Gibbs there.